Yeah, morning trades. We've come off the back of a torrid week for risks last week. The S&P was, I think, down 3.2% for the week. We're down 4 weeks in a row. The Nasdaq down 3.8%. Yeah, the technicals don't look particularly good, as you know. Sentiment is shot to pieces, whether you're looking at the AAII bullish bearish sentiment index, the Citigroup oversold, overbought index, market internals. You can make a statement that markets are shot to pieces at the moment, but they're obviously going for regime change, and what used to work doesn't necessarily mean it's going to work this time around. But we do obviously have the earnings season behind us. We're going to have that catalyst behind us. So it's really about global macro. Also, we saw high yield spreads up 24 basis points last week. The dollar was up 2.1%. Obviously, we're watching all those factors as we go into the new week. Now, what are we watching? Certainly the Fed meeting coming through in the mid part of the week. It's going to be very, very interesting indeed. 50 basis points is a lock on in the market size. Where you could see a reaction in rates in the dollar is really around what happens in June. The market's pricing about a 40% chance we get a 70 basis point hike, 75 basis point hike. So will that materialise? How quickly do the Fed want to get the Fed funds rate above that neutral rate of 2.4%? At the moment we're pricing that around September. Quantitative tightening is pretty much in the price at the moment, but we're going to obviously learn a little bit more about the technicalities of that. The RBA meeting tomorrow, I think it's going to be a big one there. From a trading perspective, vols are pretty high. We've got 1 week vols at 14.2%. Gives you a break-even move about 115 pips on the week. I think if you're looking at pricing, 18 basis points of pricing is being priced in there. You've got 38 basis points of tights being priced for that June meeting, and 257 for the full year. So again, will the statement read into that? One suspects there could be some downside risk, at least from a rates perspective. The Bank of England meeting, 25 basis points is priced, but the market goes into this certainly short of pounds. We have pared back a little bit of that recently, but 1 week vol sit around 11.46%. The market's expecting a dovish reaction from the Bank of England, and you're going to see that in a split there, obviously deteriorating growth prospects and obviously lack of fiscal support there. Apart from that, you've got non-farm payrolls, ISM manufacturing numbers. We've got a whole raft of Fed speakers who come out after the Fed meeting, including John Williams. Then you've got a number of ECB speakers. Most importantly, that July meeting now pricing 20 basis points of hiking. Another big week again. Trade with Pepperstone.